Hello, everyone. It's Stuart here again. Hopefully, you can see and hear me nice and clearly. Welcome to the proptrade.com. We are looking forward to one of the key data points of the week, if not the key data point of the week, I would argue. Obviously, we've got 4 central banks this week, or we've had 2 already, 2 more to come. Bank of Canada later on today as well, expected to be a hefty 50 basis points cut with everything that's swirling around in Canada there. But before that, we got US inflation, as you can see here. Hopefully you can see that. I was looking at the screen, doesn't look too clear actually. Headline is looking to tick up to 2.7%. The core 0.3 of 1% for November. And an annualized basis of 3.3%. So still a bit sticky, that core number, still a bit sticky. So anything above that could have obviously an impact, or this data will have an impact on what the Fed do next week, potentially. Anything that's a bit too strong might impact their expectations of a rate cut next week. But not much deviations really expected. That's the consensus from most of the analysis I've seen from the pros in Wall Street and the pros in London over the last couple of days. But it remains, a core for all central banks. They've got this idea that 2%, which has been focused on for many years now. 2% is it's good. It shows prices are going up. They're not going up too much. And that's where all central banks are trying to get their core fiscal and monetary policies down to. So, do you like my new top, by the way? I've got a new little sweatshirt. It's supposed to be a t-shirt, but it's come as a sweatshirt, but I don't mind. There we are, proptrade.com. Hope you like it. Dollars remained on the front foot this morning. Aussie was under pressure earlier in the week because of their data earlier. They're under pressure again today. Kiwi's also a wee bit under pressure. Yen has also been focus of attention this morning as far as the forex markets are concerned. Stocks were down yesterday. Let's just bring in the charts. Stocks were down yesterday. That's the euro. Come back to the euro in a minute. So it's the hourly chart. That brief break of 106 on Friday from non-farm payroll. And then we've been sort of looping lower ever since. And critically today, big down candle on the 7 o'clock candle. Lots of moves for the dollar this morning on that. As we opened, we saw the sterling doing the same thing, yen doing the same thing. As we moved stronger dollar. We've lifted back over the key 105 area so far today. So let's zoom that up a bit. Today, and we'll see where we go with as the data rolls out. So dollar remains on the front foot. Sterling, a similar sort of pattern to the euro there. Big down candle here on the 7 to 8 o'clock candle as the European trades got into full swing. So we've been down this morning. Sterling touched a new daily low, 127.13 this morning, below the one we had for earlier in the week. So dollar's sort of come back. So let me see this choppiness. We're still to the downside. Aussie back to 63.50. Hello, there we are. There's the Australian dollar. Again, pressured this morning. Come back a wee bit in the last couple of hours. Off this low at 63.36. Did take out this. Let me just remember this December low we were talking about at 63.72, and then we were talking about this 63.50 zone earlier in the week when we saw the big move against the Aussie. So let's have a look. There we are. Let me adjust it. There we are. So we continue to move new December lows, and below this August is what I was wanting to show you, wasn't I? I forgot the weekly. Took it all the way back to this August spike we got down to. So we've been and we're below that currently today. So Aussie very much under pressure. Likelihood of them moving sort of raised a wee bit from what the RBA said earlier in the week on Tuesday, but the trend, as you can see here on the weekly chart, very ably demonstrated over the last from this peak ahead of the at the end of September, where we were talking about it here. What we have .70 for the Aussie. It's just reversed really aggressively ever since. Obviously, accelerated from the election week, and down we go. Last week, and it's a negative week so far. This week was also a new 2024 low for the Australian dollar yesterday or today. In fact, it was, wasn't it? As we've moved lower here. So this is our August low, and this morning we've moved to new 2024 low. Similarly for the Kiwi, I know many of you are trading the Kiwi with a similar pattern. If we go back up to the weekly chart, you can see those Asian stocks, Asian positions under pressure. So this takes us again back to October 2023, and we're below that. So a new 2024 low for the Kiwi. Also, dollar CAD is also at new highs. We're back over 141 yesterday. Sorry, last week. Sorry, it's a weekly, that one, isn't it? Go to daily. So we're back over 141 this week, and we're continuing to push high. And then yesterday we got within a few pips of 142. So dollar strength all across the board. And we'll just go back to the weekly, which I showed you before. Again, obviously new 2024 highs for dollar CAD as we hold over 141 and test 142 to the upside. So see if there was any turnaround from the CPI data we get today, and then obviously the Fed with our announcement, likely still to move, still 80, or last time I looked it was 80%. Let me just check the, it's not on there, is it? I'll find it down here. The CME expectations for the FedWatch tools. I checked it yesterday. Here's the CME group. This is our search of very quick results here. Yeah, so 86% now. So it was 81, wasn't it, earlier in the week when we were looking at it? So not nailed on, but it's a very very conclusive that we will look like the market is pricing in a 25 basis point. This might obviously cool if there's some significant variation, remember, in what's expected in the CPI data in the next 5 or 6 minutes, but we'll see how that pans out, obviously. So CAD, as I said at the top, let's just have a quick run through the others before. We've still got 5 minutes. Oil, it's not oil, gold, nice rally. If you've been following us on the Discord group, I've just got the daily, sorry. As we've been saying earlier in the week, we were, there we are. This is a big down candle. We were short here on the 25th, and nothing happened. So I got a bit bored, didn't I? I can't remember when I actually closed that short. I think it was this day it went up, or was it the day it went? And then and then the following day it went down. But yesterday, not yesterday, on the 9th. Tuesday, we got this trigger on close at we got in at 60.60. I was looking for just an initial $10 to 20.70 for the first target. So we took 80% off as we went through 20.70 there. You can see the 50-day moving average, but we broke through it really aggressively. I just take this up to the 4. This is the daily time frame. So it was a big strong day yesterday. We continued to recover, and we could this sell-off. So you can see the 50 period fib levels was sitting at that 26 zone where we'd sort of looked like the pressure was going to take us through there on Tuesday's close. So we went through that yesterday, both the 50 and the more significant 61.8 Fibonacci levels. If you, I'll do a webinar on Fibonacci, and I'll upload it to our website, because Fibonacci is especially the simple retracement tool, is a key tool I use all the time, and the fib levels come into play time and time again. And if you're not familiar with it, do check it out. So I will do a quick recording. Somebody said there was a comment. No, somebody comment. So we'll see what that looks like. I'll do that as well, or probably next week now. So we'll see how we go. So anyway, gold through and to the key to 2,700 level. Here, there's the yellow line. We were shy of it yesterday. I've closed the rest of that trade out this morning around about just shy of 2,700, 2,695. But it continues to move to the upside, and you see we're sort of flat today. Fibonacci has an extension level, which it's uses for targets, but as you can see, the extension level is the 1.618 extension. That takes it to this beyond the all-time high we had here at the end of October. So 2,792 is the next higher target, but the first target is obviously the whole retrace of this decline we had on the 25th. So 27.21 is the next upside target if you're still long gold. But certainly from a consolidation of 9 days, as you can see there, sort of sideways action, 1, 2, 3, 4, 5, 6, 7, 8, 9, and then bang, we brought back over the initial Fibonacci level here, the 38.2, having held the 23.6 level. So that was a strong one. So that's when I got in on the close of day here at 26.60. And again, it was also a trigger of this strategy here that's on this chart, the crossing of the 5, the 9, and the 21 exponential moving averages, as you can see up here. So 3 minutes of the data, so I'll stop talking in a minute. We'll have a look at how it comes out. But gold remains bid here. Look at the hourly chart to the upside. So it's got, obviously, as you might expect, got to the 2,700 and then recoiled as profit was taken, but we've bounced up. Looked like we were going to go low here in early Asian trades, but we didn't. That big move for the dollar, the 7 o'clock candle, obviously pulled gold down a tad, but as you can see, the hourly 20 period moving averages kept you the right side of that trade so far this morning as well, although it's probably flat. And obviously 2,700 is a big line in the sand, both psychologically and technically on this chart. As I say, guys, anything you want me to have a look at outside of the norm? Otherwise, I'll just stick to the majors. Let me just go back to the Forex market as we see the reaction to the data coming in. So if we just move this down to the 5-minute chart. So here we are as we're running into the data. It's sort of ramped up. Again, remember this 5-minute chart is against the higher time frame. So the 1 hour, the daily chart is very much in the downtrend. The 4-hour chart is very much in the downtrend. Obviously, the 5-minute is very detached from the 4-hour chart, but having a bit of a run from its the 105 level so far. We're up 15 pips from 105 to 115. So we'll see what impact the inflation data has on that, and then we'll see if they have the CME chart. Wait till that triggers or runs over. See if we get an instant reaction. So at the moment, 5-minute traders are long here. Euro having got back to recover 105, but the main data of the day is to come. Aussie dollar CAD obviously be impacted by if the Canadians do indeed go with the 50 basis points cut, which looks like that is going to be the case. There we are. So the spread widened there as the data came out. There we are. It's a stronger move. Well, it looks much exaggerated, doesn't it, on the data coming out on these short-term timeframes, but initially up as the pros messed with us. See how the spread erupted as immediately as the data came out. So that's why it's, you've got to be careful when you're trading the news. But again, it's still biased to the upside here on this 5-minute candle. Let's see how it settles in the first 5 or 6 minutes. Remember what happened on Friday? We at non-farm payroll, we had a similar sort of move, didn't we? And yet we turned around, close of the day, we'd gone all the way around. So it's always important to have a strategy, trade your strategy, stick to your strategy, regardless of what might look like the news is pushing things. Is this still valid? Wait till a candle closes. So, we've just triggered. So let's just have a quick look at what has come through to cause that action. Let me just update the calendar here for you. So today's US, where are we? Wednesday 11th. So core has come in bang in line with expectations. The monthly is also 3%, so it's a bit tougher. And it's a bit of a non-event if we look at that numbers, because it's all in line with what the market was expecting. 3% year on year for the core. Year on year, 0.3 for November. And the headline has ticked up by the 0.1% as expected, as it says there on the calendar, in line with expectations. So that rally, you could argue, on that 5-minute chart in the euro may sort of turn around on that. That's kept things as they are. Remember, the Fed, this won't have updated yet because it's obviously just a free internet connection, but 86.1%. Remember, that's what it was before CPI came out. We'll come back to that in a minute. So, as we might have thought, I'd be careful trying to buy this rally. So, but again, here on the 5-minute chart, we could easily come back to test 105, but it's clearly buyers down at this level, as you can see here on the 1-minute time frame. So nothing really new in any of that data. There was nothing in the details, I don't think. Let me just check a different feed I've got here. Yeah, nothing. Excuse the top of my head, guys. It's 2.7%, as you said. It's come down. It's sticky, but it's start to move up again. So probably hasn't. In dollar CAD's obviously very much in focus, given the Canadian central bank is due to cut rates by 50 basis points in an hour or so, but again, it's sort of biased. It went against the dollar, and we're sort of edging up to the upside. There's a huge range on that 5-minute chart. Gold again, would probably not had much of an impact on that data. I wouldn't have thought. Bias to the upside in the 5-minute chart here. That was the head of the data. That was before the data, and since the data we've gone back perhaps to test 2700. It's not really, to be honest, inline data doesn't really move the markets that much. Sometimes players can use major news announcements to hide some trades they've tried to either acquire or offload, buying or selling, and it gets lost in the volatility of the news coming out. But gold testing 2700, but first test this morning really sort of failed to break through significantly. If you look at if you go back to the 15-minute break, sorry. So the early hours trading, it just couldn't. There was no emphasis, there was no momentum. There's not a lot of volume at that time of the day in Asia, and then it sort of declined. It's as Asian trade got into full swing, the Europeans woke up round about here. Sorry, what I'm talking about, round about here, and took it back up, and we're sort of been bouncing up. But it's struggling to get over 2,700, and that the data from the inflation from the US is not really going to knock it off. It's not enough to push it through the 2,700, but equally, it's not enough to knock the Fed off their plans. And this trend, the higher time frame trend, this daily one, it may stall again at this 2,700. It may have a go over the next few days to the 2721 zone, but most of us are out. Not many people will be out of that move higher. But obviously the bigger issue is obviously the wider geopolitical situation and the daily changes that are happening currently in Syria. Don't seem to have spilled out into a wider regional issues, despite the Israelis gobbling up land in the Golan Heights and destroying the Syrian naval fleet. That was a bit of a shock yesterday. So how much further the Israelis are going to go and what the new regime in Syria is going to look like is all very much in play. And that gives a bit of an emphasis to this rally we've had in gold over the last 3 or 4 days. So we may, if that calms or cools, we may see this moving down Any more hiccups, and attacking the Strait of Hormuz by militias on the oil, obviously an impact on sentiment, and obviously impact the oil market as well as the gold market. So we could see the 27-21 area hit and beyond, move to the upside. A cooling of the situation, we might struggle to hang on to 2,700 and the gold market as we come into the end of the year. Stocks perhaps tick up. Stocks have been down the last few days. We were down again yesterday into close. What did we close yesterday? We were down fairly 18.634. The S&P 500 was closed out yesterday, 6,064 we trade at the moment. So it's currently an up day here in the futures market, or the derivatives markets, I should say, having had 2 down days, but obviously the live cash market is yet to kick off, and that's lifted. Interestingly, that's lifted stocks quite significantly. That's inline call for inflation. So perhaps a bit of a respite that it wasn't as sticky or it hadn't ticked up higher than many had expected. So the dollar might turn around on that. Dollar index itself turned down. Actually, let's just have a look how it did react in the 5 minutes. Where are we? We're not even, we're just 5 minutes after. There we are. We were ultimately positive in the first 5 minutes, but we continue to decline there. So dollar a bit weaker. Stocks have ticked up on the inflation being as expected. You always say, if something's as expected, why are things moving? Why do things move like that? Well, 2 things. One is the data is now confirmed, so expectations are confirmed. They're in line with what most analysts and most markets are expecting, so that's okay. So they drifted around before the uncertainty still, because it's still before the official data is out, there's still an uncertainty that it may not be better or it may be worse than expected. But now that's confirmed, right? What's the next data point, or what's the next thing that could move the markets? Well, anything that happens, any news happened particularly in the Middle East at the moment, is a major market mover. But the next big economic one is within an hour or two, and the Bank of Canada. And again, that's expected that they will be more aggressive. But again, that's been reflected in, I haven't got the Canadian stock market here, but if we've got the Canadian dollar, the weakness we saw earlier before, of the Canadian dollar. If we go to the daily, as we saw earlier, it's weakened very significantly on the expectation now, particularly this week, that they will go full 50 basis points. So we've rallied up. We're at, I say, new 2024 highs. We're within a smidge of 142. So 142 looked a bit inevitable, a bit like 100,000 looked a bit inevitable for Bitcoin, but it failed on the first attempt, didn't it? So we could see a move down here. If, they only go 25 basis points, there'll be a major shakeout on this as the Canadian dollar steadies or improves significantly if the surprise. Markets hate surprises, and anything less than 50 basis points from the Bank of Canada will be a surprise today. Interesting to see how Governor Macklem deals with the press conference later on as well, because this is quite a hefty cut. The Canadians, they're not afraid to move aggressively and quickly. They were first out of QE, first in and first out of the major outside of Sweden and Switzerland, as far as QE is concerned. So they're not afraid to move. But certainly the political situation is weighing a bit on the Canadian dollar as well. So Loonie under pressure currently, but that's to look forward to later. Let's see if this has impacted the expectations on the CME. 86.1, remember, 87.8. So we've gone higher on the confirmation of the inflation. Still around, still sticky. It's ticked up 1, but not as bad as it could have been. Obviously, the impact earlier in the last couple of months of the round of strikes that were going through the US, and also the 2 big hurricanes had a dramatic impact on the economic activity and job creation in those few weeks. So 87.8%. So it's ticked up even more than it was last time. Obviously, the January meeting, lots of chatter. There were lots and lots of cuts to come in 25. That's perhaps on hold now, given what the new president will be behind his desk in the Oval Office come the 21st of January. So next meeting, 29th of January, just a week after Mr. Trump takes over to kick off Trump 2. So 70% chance of the range remaining in the 425 or to 4.5% for US interest rates in January. So there we go. It's ticked up even more just in that refresh. So 96%. So it virtually nailed on now. So again, it's all priced in. And we should see perhaps a cooling of the dollar actually. Yeah, so dollar down here. Let's see what the euro. It's done on the back of that. You want a 5, yes, it's come back. So it's holding this bounce from 105 euro. Yeah, so there we are. So overall in this, where are we now? We're 15. Our 15-minute candles just complete. So the first 5-minute candles are positive. So the dollar is weakening on the confirmation of the inflation story thus far, a bit like we did on Friday for the non-farm payroll, but that was better data than expected. So dollar sort of weakening a tad, and the gains in the indexes maybe even more exaggerating the way when we last looked. Let's have a look at the Nasdaq. Nasdaq is of the three majors. The Nasdaq is the one that's most vulnerable to interest rate hikes, because a lot of the high tech companies and startups are more vulnerable to interest rate changes and highly geared in their funding. So yeah, there we go, a big candle there on the back of the data from 21,415 to 21,500. So a 75-point move for the Nasdaq 100 on the back of the data. Yes, because that was the data there. We were just above 45, in fact. So dollar's a bit tad weaker, and stocks are higher. Gold, maybe, so look, we got back through 2,400 for gold. No, we haven't. We're still stuck. Well, we did for a little bit. I was chatting before. So our day high so far is 27.01. Sorry, is that that one? No, it wasn't. Was it? We went higher in those early trades this morning. 27.04 has been the high of the day. So to be honest, it looked that well. We'll see how it goes, but it looks like it doesn't want to move too much through 2,700 currently, but it's certainly banging into it. So will we have another breach around here? Obviously, much lower volumes at this time of the day at this time of the day earlier on in the day in the Asian session we've got at the moment. So we could see a test of the 27.04. So just watch that for a bit more certainty on positivity today. That high from this morning. Oops. From this morning, if we can hold 2,700, $5 there for you. So there we go. I say the inflation's coming as expected. The next big announcement in an hour or so is the Bank of Canada rate decision, and it's actually on here, but Macklin's press conference afterwards will be very, very interesting if they justify this 50 basis points that the market is expecting from the central bank in Canada. So take care. We'll see you all tomorrow. It's claims again tomorrow. It's Thursday. Let's have a look tomorrow. Later on in the day, there we are, and we've obviously got the big day tomorrow. We've got the ECB, PPI from the US, and weekly claims. So ECB also expected, and you see here the 25 basis points from the ECB tomorrow. And again, Miss Lagarde's press conference will be very interesting. Is this the last one? The data in Europe continues to be sluggish. Maybe certainly markets are anticipating more to come in 2025. next week, Fed looks like they're going. Looks like the Bank of England may not be going now. But anyway, that's for next week. So lots going on this week. 2 weeks today to Christmas Day, isn't it? Those of you are celebrating. So the countdown's very much on. So I'm just going to leave you with the news that US inflation has ticked up by 0.1% to 2.7% headline figure, but more importantly, the core figure remains sticky as well and coming at 3.3% as the market was expecting. Gold is struggling to get through 2,700, which is a damn good go. And the euro is back over 105 and moving to the upside. Where are we now? 105.35 at the moment, so 35 pips above the key 105 area, and it's had continual 5-minute candles positively since the data came out. So next upside level would be the 105.40 zone, which is our daily high so far. So that may be tested as well in the next few minutes or so. But you would expect a bit of a retrace from this continued movement here on the fact that data came in as expected. So all eyes on ECB tomorrow. Bank of Canada later on today. Take care, everyone, and we'll see you all again tomorrow. All the best. Bye-bye.